Hello, warriors. Let's have a great day. Hope everyone was able to take advantage of King Dollar abdicating the throne, or at least taking a vacation, maybe a crusade. So we're approaching this throwover level. We get through here, the next area I'm looking for is about 95.5. So made a new high.
Good morning, Coach. Personally, I can't see your screen yet. Yeah, I just want to tell you.
Oh, how about now?
Now I can. Yeah, now I can.
Okay, so King Dollar, and also welcome viewers at investing.com. I'm going to get to the S&Ps after this. I know a lot of people are ignoring what's happening in FX because all the action and huge volatility and drama is happening in the equity market. But this is important. I think it's important for the equity market to continue to correct to the upside. I'll show you also what I think it needs to hold for an ongoing failing rally to continue. But to me, this is a pretty negative action here. Of course, we're not under the throwover. The 50-day is pretty much right there. So I came into the week with two formations of two different asset classes, but like everything, it's one big jigsaw puzzle. And everything does affect everything else, especially the dollar. I feel it's a linchpin to the bond markets, the equity markets, trade wars. So I came in with a falling wedge here in Euro. And yesterday we actually tagged this line I had for a while. And it looks like last night is where we're accelerating, threatening a breakout of this wedge. And if I use this as an anchor, we start getting through 14, maybe we have 15 and a half coming next. So I think this is a possibility in the Euro. And why it's important is investing.com, traders, investors, viewers, listening to the latest round of earnings reports. At least 25% of the corporations out there are talking about how the stronger dollar has hurt profits on the currency translation. So strong dollar is a problem. So if it's not going to be a problem, perhaps it gives the market a reprieve, which really started before the euro. And I had a falling wedge here as well. Yesterday we broke out. We had massive divergence on this crazy day Friday where it dropped on air and came back viciously, still closed lower in the week and lower on the day, but it closed, better than down here. And I saw this wedge and this divergence, and even at the spike low, we didn't make new lows. So the way this looks to me is as long as we're holding 2680 on pullbacks, and I think there could be, we could continue to work higher with an outside shot of, 2820 again. I think that every bear in the world will capitulate over this was the only decent rally after the big break. I did something here, but I didn't think it was real. I thought we'd pull back and go again. So missed a lot of this, caught a lot of this, missed a lot of this. And I'll tell you, to be able to hold a position going into really even, this week, really you needed the patience of a saint, and probably were better off walking away and just having conviction about a level or an outcome, because every day or every other day the market would reverse and make it very difficult to be a patient person and hold to targets. So that's what I see in the indexes and the dollar. Okay, so I think the dollar has a way to go. I think that if we take this out, 95.5 is possible. And something no one's talking about is, what if we have 1.618 of this from here? So we've shaken out every dollar bear. They're gone. What would it take to shake out dollar bulls? Taking out this low. And this was a bandied about target for a long time up in here when we were trading in here, that 93, 92 was possible. So why not? But initially the mid 95s, 95.65, you could tell by this green line, it's been an important pivot. So that's where I'd look. Also, what kind of week are we having here? All right. And look, on the weekly, the 300, the 50 on the weekly is also at 93. So we're about unchanged on the week now in the dollar. I think that's really the big story today. The only other thing of interest, of course, the metals are bouncing with it, and maybe we get one more leg. But I thought it was interesting, and even today with the market sharply higher, how the yen reacted exactly, rejected from the 61.8 level yesterday. Saw this, notified a few people I'm flat. I'm not looking to do anything until now after the NFP release tomorrow. I do have a great guest. Stick around for Callum Thomas, a very well-known trader, top-down charts, great technician, and it's going to be great to talk to Callum and get his view, because, you know, when the markets are one way, you know, you either have people agreeing with the trend or, you know, contrarians that have been fighting it for a while. But now that we have some two-sided action in the market, it's interesting to see different viewpoints and methods and projections. So stick around for that. If you are an FX trader, consider spending $1 today. I think it's probably worth $1, what I just said, at least 50 cents. You know, if you could take advantage of a declining dollar on a rebound to try our trial. And they give you 10 days to check it out and navigate it and take a look at all the great research that you're going to get. See, you even get to listen to our 007 when you log in. We also have the private chat that, you know, Blake is here for 10 minutes, 15 minutes before the number. In fact, I have to wrap up pretty soon. So Steve is here. We have, you know, Grega stops in. The team's the best. So you get access to Elliot, harmonic work. I think Andre may be with us today. So I think it's, you know, if you're watching the markets and, you know, most people risk, I don't know, I'd say about between 500, $1,000 a day when they're pulling the trigger on something they think can work for them. So the subscription is, you know, 9 pips a month. Pick the brain of this team, which I'll show you, and then I'll turn it over to Blake. And while I'm talking about it, this webinar is being brought to you by Forest Park FX. Earn cash back on every trade. They'll arrange rebates. They'll also provide. We have this plan where you could pay for your subscription online through just your trading. We'll pay for your subscription here. So I just got distracted by, I'm going to have to find out how to get rid of that in my Skype on my screen. And so that's it. I think the big takeaway this week for me is a possible dollar turn, recovery in the market, gold getting some help with a weak dollar. I think that we got right back to the breakout yesterday in gold. So, you know, between yesterday's low, and it's much stronger than silver. Wow, gold really did take off. Okay. So, see the green line? I've had it here for a while. That was a hard close to buy, but looks pretty good. You know, maybe the wave people were looking for up when we were here before this recent sell-off. So the dollar made new high. Finally, the dollar got to the gold a little bit, but, you know, to me, it looks like just a normal pullback to a breakout. It should go now. So that's looking good. Silver, not as good. Silver, maybe you could get back to 1560, 1580, but silver is way underperformed. I mean, this high was made over a month ago. So that's my view of the markets and my, belief and total conviction in the company that I'm with and the company that I keep. So Blake, what do you think? You doing anything into the NFP tomorrow?
Well, good morning, Coach.
Good morning, buddy.
Hey, I pulled a lot of profits off last night, so I'm happy about that. Sorry, I've got somebody.
I know when you're distracted, you lose your train of thought. I have to get rid of emails showing up on my screen and Skype messages.
Oh, well, what you have to do, Coach, is you have to actually sign out of Skype before you start your webinar.
Okay.
Just sign back in afterwards. Anyway, I was just trying to navigate here through some Canadian really quick. Let me go ahead and grab the charts.
Okay, buddy.
So I pulled dollar Mexican profits off yesterday or last night, because I shorted it up here at 2040, a really great entry. This is I'm going to show you the repeat pattern of this, bat pattern that we had. It's a smaller one. It's exactly the same as the last one. We hit a confluence of 161% extension, 78% retracement. So, we had a pattern in play because it was a, big confluence up there at the 161% extension. So shorted it, did really well with it, and took that trade off, and it was also long the Aussie dollar on this inverted head and shoulder pattern right here. Took it off when we hit this trend line this morning, and at the top of the resistance, you can see it is breaking out. I'm still actually bullish the Aussie. I just, obviously don't have it on right at the moment.
You were talking about how resilient it was standing up to risk off over the past week or so. So you saw the message and then went with it.
Well, that was the key to the Aussie on the long side, and same with the Kiwi, is these currencies have held. And by the way, we just completed an AB equals CD move in.
A lot of action today, man.
Yeah, a lot. So now,
good to be a ForexAnalytix subscriber on every day, but especially an action-packed day.
It was a lot of profits were made overnight, and it's been, and I'm going to be,
it's been tough.
It's been really tough, right? Really tough in the FX market, because we haven't had correlations really working, and so when correlations like gosh, what's a good example of like an analogy I could use? It's like kind of like the slinky effect. You pull one side of the slinky, and it's like you don't feel like everything's moving, but then finally, as it turns the other direction, it whips the tail around. So this is a good example. The Kiwi is a great example of this, and I can just compare it to the S&P, for example. Okay, we had this big. This is a great example of this, actually. So we had this big sell-off in the S&P, right? The Kiwi didn't really go anywhere. So as the S&P bounced, now we're seeing that tail whip around, and then the Kiwi is bouncing. So that to me has been that made last night and the last couple of days a little easier to trade, but it was difficult because these correlations just weren't. Let me remove that. These correlations weren't working, and we had stocks going higher, the dollar yen not going lower, and then the dollar yen finally just, we use the old beach ball analogy, where you're trying to push the beach ball underwater and it won't, go down, and then all of a sudden you let go and it pops out of the water. The same beach ball analogy happened with the Kiwi, same thing with the Aussie. And so now we're seeing them really, take off. Now, I'm not buying here into this rally. I'm not getting long right at this moment in time. I want to buy dips, and like you can see the Kiwi, we just had an AB equals CD move. So now I'm looking to buy dips, like buy a dip that looks like that if possible, and same with like the Aussie. So there was great gains overnight, but you don't want to get too excited chasing the market at this stage in the game. So I like the moves. I like the action that we're seeing. I look at the S&P and I'm like, okay, well, the S&P stalled at the 38% retracement. And this is a great example, especially for those of you that are with that came in through investing.com and you're not familiar with what we do here at ForexAnalytix. We don't just look at currencies. We look at everything. So, we don't really look at individual stocks. I mean, every once in a while, we'll throw a Google up there because it catches our attention and it has something to do with overall risk sentiment, or I know Dale does too as well. But this is this was an AB equals CD move. We completed it. Big long-term trend line in the S&P. Here, I guess I should go over the daily. Big long-term trend line, in the S&P, 78% retracement, gave us the bounce. We cleared the downtrend line. In my opinion, the S&P looks like it's going higher. Okay, so, if the S&P is going higher, what does that mean to you? Well, that probably means that the dollar is going to lose strength against, especially a lot of these commodity currencies. Like that right here confirms the idea that the Kiwi is probably going to continue to bounce, the Aussie is going to continue to bounce, and I'm not saying that you could buy it right now and close your eyes and open them a week later and you're probably going to make money. Do I think there's a better place to be a buyer of like the Aussie and the Kiwi? I do. I think today strategically I'm going to try to get in at a better price. I don't necessarily think if anybody knows me, Coach, you know me pretty well from my trading wise. I don't like to chase. So we're up, like for example, we're up 100 pips in the Aussie. That's great. I think the Aussie is a great long. Do I want to buy it when it's up 100 pips? No, I'm going to try to buy it on any dip if I can find it.
I've seen you hold your nose sometimes if it's a significant breakout, and
sometimes, sometimes, especially going into North American trade, the real key here is where do we stop and how and do we when you're reading price action, you got to go, okay, like let's just say I'm gonna draw this out for you. This is the 4-hour chart. So let's just say we stop here, okay, and then we do that, and then we start consolidating. Then you have to be a buyer, okay, because then it's not pulling back. So when something doesn't pull back, then you
corrects in time instead of price.
Exactly. And when that happens, then you have to start chasing. You're not going to get a significant pullback. This move looks very impulsive for the Aussie, and same with like the Kiwi. So it will stall at some point, and when it stalls, you have to see, is it pulling back or is it just as you said, correcting in price versus time. And so that's what I'm going to be looking for today. Now that I've closed out a bunch of profits, now it's key. All right, do you really chase? The guys in my office, and we were talking yesterday, this is pretty big. The euro dollar, it was sitting down at 113 and change, and I actually traded it like a bozo. I took it off the table for like a couple pip loss when I was down here at 113, just in case it broke down. But there were huge bids, and my office in Connecticut, they have some pretty proprietary stuff that we work with, and we could see all these big, huge bids coming in, and you don't know who they're from, but man, I mean, there was, 400 million, 600 million, $1 billion on the bid, euro dollars, and sellers would come in and hit the bid, and it wouldn't even go down. And we were talking about
Steve Mnuchin.
Yeah. Well, we were talking about it. It was pretty important how it was holding at 113. And I'm like, man, you have to, and I'm telling everybody in the chat room, you got to realize that people are selling to these buyers, and these buyers are real. I'd watch the bids just get filled, and then the new bids would fill in, like big lumpy ones. And so there are big buyers down here, holding the euro dollar at this major support. I thought the risk was that we could possibly drop down towards 112 before bouncing, but I'm like, okay, if everybody's buying down here, these bids are getting filled. They're real bids. They're not, it's institutional size bids. They are, getting filled. So, you got to be careful of a squeeze, and obviously today we're squeezing. Now, again, the euro, does Europe have issues? Yeah, it does, but we're also heading into our midterm elections, and I don't know if it's kind of a toss up here, but the dollar, if the Democrats come in and start taking a lot of seats, we could see dollar weakness as the Trump administration is going to have a very hard time pushing policy through. So we could see that dollar.
Blake, I thought that Trump has already made America great again. So, that should imply that there is no improvement that can come anyhow. So why does it matter?
You're right. You're right. And by the way, just so you guys know, we are going to we're going to host a special on Monday. So make sure that you're here on Monday. We're going to be talking about the U.S. midterm elections and the implications and where we're at currently in the FX market. And so it's going to be a really important webinar Monday morning, because it'll be ahead of the Tuesday morning elections, or Tuesday night elections, if you will. So make sure that you're tuned in, because we're going to go and talk about some of the different outcomes and what it may mean to the FX market. But I'll tell you guys, the dollar is already weakening. Well, we got past the end of month flows, which they proved to be correct. We read a lot of reports how the dollar would be bought going into the end of month. I didn't really necessarily believe it, but it happened, and it came in pretty aggressively. And then obviously today we're seeing a reversal of that, and we're seeing the dollar being sold pretty aggressively today. However, I think that we can buy dips now in the euro, knowing that 113 is the floor, and if 113 breaks, then then the whole dynamic of the FX market changes. But really strong, powerful move in the euro yesterday, and a really big squeeze. A lot of bids got filled. A lot of euro was bought by institutional buyers yesterday down at the 113 level, and they're sitting pretty. I mean, you think about the amount of money that was made in a 100 pip move off the buying that happened last night or yesterday. It's amazing. It's amazing. There was a ton of money being made there. Yeah, hopefully you didn't get caught on the short side either. So now, you look at, like, for the cable, for example, I got to point this out. There was a news article came out overnight, and that happened right here. I was actually trick-or-treating with my kids. I had a mask on and everything when the pound ripped, and there was an article in the Financial Times saying that the financial sector has come to an agreement with the EU and the UK, and about it was all about the financial sector and Brexit and how they're going to navigate through it. It got denied today 4 different times. it got denied by the UK several different times, and the pound still is stronger today. So really, really, the pound looks like it wants to squeeze, and big support came into play down at 127. So now here we are at 129. Do you buy the cable up here? Well, I think people are getting squeezed, so that's seems for certain. Do you want to be a buyer right now when it's up 160 pips? Probably not. But like I said, you got to watch price action today. See if it consolidates. If we can hold here above, the 128.50, it's probably a good long, regardless, because there's so many people that are short the cable. Looking for the worst case scenario. So now here we are, we're holding up pretty well. So with that being said, I am going to pass it over to my colleagues, Steve and Stelios. Good morning, Steve.
Good morning, Blake.
Good morning.
Hey, Stelios, how are you?
I'm very well. How are you?
Good. So really, really weak price action in the dollar across the board today.
Oh, absolutely, huge reversals.
Huge.
Yeah, I mean, we were talking about it. On the DSI, it was at 95 for 2 days.
95 for 2 days in a row.
Yeah. So the DSI is not always the perfect indicator, but it's a damn good one. So
and it's one that you complement it with. Okay, do we have good support levels here or good resistance levels? Do we have harmonic patterns setting up? And that's that's the real benefit of using ForexAnalytix, is being able to go, okay, I'm running through the analysis and I go, all right, well, we've got this analysis here, we've got this analysis here on basic, we've got this analysis on harmonic, and everything points to possible bounce. Oh, let's take advantage of it. And that's why using the multiple analysis approach has been so valuable for the for our traders, is because they can see, okay, we're heading up into resistance, we're heading up into support, we've got a confluence of different analysis all lining up at the same level. This could be a good reversal point, or this is a good place where it might continue, and that's been a real big benefit for our traders. And then combining that with like the daily sentiment index, which we as a company get it it's a subscription, we get it every day, but if there's some stuff that's very important, we share it with our community in our chat rooms, and that's why we've been highlighting that the DSI has been at 95 for 2 days in a row. So, and it's a big deal.
Also, Blake, it hasn't happened that I've talked about it in the very recent times, but for people that have been listening to the webinar for longer, they know that we've said many times that, statistically speaking, setting highs and lows at the beginning of the month is a high probability scenario. So if today's reversal gets confirmed in the dollar, given the fact that it's also the first of the month, it's going to have increased significance, and we have to stress that out, right?
Yeah, I mean, if today ends up being the high of the dollar, sure, that could be a real big deal. So,
and also having to do with the possibility of let's say a pullback in the cable, I wouldn't be so optimistic, because it happened. I was writing an intraday update when we were in this 4-hour candle that you see here. So we were testing this nice confluence of resistances, that previous low and the 38.2. So, I write the analysis that we're currently on a resistance, we might pull back from there. So I post the analysis, and immediately we get this little pullback. But just look how this pullback before this 4-hour candle even closes got immediately retraced. So we got like 50 pips lower, and there was immediately buying interest, immediately, as you were describing for the euro. So I don't know, it seems, that the USD dumping seems very, very strong, right?
Very, at least today.
Yeah.
Well, hey, you guys have a great one. And good luck today. And thanks everybody for listening in. And I'm gonna get to the markets.
Absolutely.
Steve, can I have a few minutes to say a few things?
Absolutely, Stelio.
Okay,
absolutely. By the way, let me congratulate Andre had big Okay, he had a big pattern in play. That reversal he caught in the cable. People that are ForexAnalytix subscribers, they know it because it's already closed. That was an amazing trade. He might be later with us, so I just want to say that very good reversals that Blake caught in the USD/MXN and the cable. Kudos to both of them. Go ahead, Stelio.
Okay, first of all, I want to answer our friend Enrique's question on which ForexAnalytix pricing plans give you access to the chat room. At the moment, all of them do. So nice and easy answer. Now, regarding, Blake covered the dollar. I think I've got a few things to say about the pound. It's actually interesting because we had that article overnight about the financial services sector, there being some kind of agreement, and the pound rallied. And now we had both sides kind of deny it afterwards. But we had Barnier from the EU side denying it and saying it was unsubstantiated, and cable actually rallied to the day's highs. And I think something that may have gone unnoticed is that Barnier said this has been unsubstantiated, but the EU can grant and withdraw equivalence in some financial services autonomously. And he said that the EU is ready to have close regulatory dialogue with the UK in respect of that. So I interpret Barnier's comments as
he closed the door, but he opened the window.
Yeah, it's not done yet, but we're not, we're still talking. So, and as I always say, where there's smoke, there's usually fire. Nobody's going to come out and say these things without anything being there in the background, kind of brewing. So, anyway, that's my opinion. But the other thing we had with the UK was that we had the interest rate decision and the inflation report, which is very important. It's a quarterly inflation report, and usually in these months, February, May, August, and November is when the Bank of England, make changes to their forecasts, to their interest rate paths and all that. So we had that. It was a 9-0 no change as expected. And the Bank of England, in true central bank fashion, they gave us some dovish, some hawkish, and some neutral comments. And it kind of makes sense because ahead of these Brexit negotiations, why go out on a limb and say something really hawkish or something really dovish? It kind of makes sense. But just to summarize what they said, they on the dovish side, they said they dropped the GDP forecast for 2019 marginally down to 1.7%, and they actually kept it flat for 2020 to 2021 at 1.7%. They did say that Brexit is hitting investment. That's a kind of a, you don't need to be a rocket scientist to know that. And they did say as well that global economies become more uneven and downside risks have risen. So that's the dovish side of what they said. On the other hand, they did say that the output gap is closing. The economy is probably going to run hot from late 2019 onwards, and they see the risk that Sorry? Yeah.
Can they take the under in that? Because they're making predictions for 2019, 20, 21, 22.
Yeah.
And of course, there's going to be no recession. This is going to be a business cycle that's going to last until our grandchildren are dead. And then we wake up to reality and we realize that this is already the longest business, the second longest business cycle, and soon it's going to be the longest. And all those predictions are going to be a joke looking backward in a few months to roughly maximum a year or two.
Yeah, absolutely. And just to finish off, the other thing they said, they hinted that there may be a need for faster rate increases. Just to remind everybody, we're currently pricing 125 basis point hike per year, roughly. So it's a very flat, upward sloping curve. And as I've said before, if there is an agreement, if it gets passed through Parliament, which many people doubt it, but I've said my reasons in the past. I think there is a bigger chance than the market thinks. If all that happens, then what are you left with? You're left with a country which has all this uncertainty removed, high inflation above 2%, wage growth above 2%. No reason why not to become just a little bit more hawkish in terms of monetary policy. So that's that's what's happening with the cable and sterling in general, and I think that's pretty much it. I don't think we had anything else major today.
Perfect. We do have in like half a day at night our time. We do have retail sales for Aussie. So,
Yes.
I wanted to mention that because Aussie, speaking now, we have a lot of technical developments here we have to speak about. So today has already proven in the few hours of European trading, and now before the US kicks in, has already proven to be a very, very active and volatile day in the FX. And as I said, reversals, especially reversals when they happen at the very end or at the very beginning of the month, we should pay extra attention to them because statistically it's proven that in this sense seasonality does matter, and the chances of seeing a high or a low at the beginning of a month is much greater than 1/30th, which would make sense because let's say that the month has 30 days, which it doesn't. It has, let's say, 30.5. So theoretically speaking, the chances should be evenly broken up, between every single day to see a high or a low, but it's proven that at the end or at the beginning of the month, the chances are much increased to see a low or a high. So saying that, let's first have a look at what the DXY has done so far today and what the
Steve,
DXY... Yes, Elio?
Steve, sorry, just to interrupt before I forget. One of our friends here is asking if this webinar is recorded. I
already answered on the chat.
Oh, you have?
Yes. Okay. Yes, they do get recorded and posted both on our site. Speaking of which, let me show it.
I put the link on the chat box already for our site.
So if you go to ForexAnalytix webinars, a few hours later, if you go to playlists, for example, this is going to be here on the Face webinar recordings, right? And on our YouTube channel. So if you go to YouTube and you search for ForexAnalytix, you're gonna find our channel here. So there it is. So that answers your question. You can even watch it live streaming there. Okay. So look at the DXY reversal. By the way, the DXY is currently testing a horizontal support area. 96 is the next level down. This looks like an evening star formation already after, and we talked about it with Greg yesterday, after finding a resistance at the equality level of the first leg higher. So 97.11 was the equality target, the first leg higher to the second one. And in essence, that's more or less where we closed yesterday. And now today we're seeing this huge reversal. Blake has already shown the Euro USD. I don't often do it, but let's go down to some 4-hour charts because you can see the reversals better here. So Euro USD, descending wedge. We talked about it with Gregor yesterday. RSI divergence. It's threatening a break higher from there. If that happens, then we will be talking about finding a resistance at 114.50. And if we actually do break above 114.50, I think we're getting a lot higher because people will start getting really squeezed. As I wrote in the intraday analysis, cable was testing this nice confluence of resistances. It got rejected once, but that was like for a very short time. Now we're retesting it. If we break above it, then we're headed back above 130. This is the 4-hour and the DXY, so you can see that we had this ascending trend line, which has decisively been broken to the downside. So we're on our way to 96. This here is the Aussie USD. Let me switch to it so you can see it. Aussie USD breaking this long-term descending channel, which was defining the downtrend. And we have a nice confluence. The first nice confluence of resistance is at 72 because it's the 61.8% fib of the last move lower. And also, as you see, this 72 area has acted multiple times as support resistance. So obviously, we need to see all those reversals getting confirmed on a daily closing basis to feel even better. But definitely the Kiwi has been leading because, as you see, the Kiwi broke out of its equivalent channel several hours before the Aussie did. The next resistance for the Kiwi is the 127% extension of the last move lower. We also saw a very nice divergence there, and that's why it's very interesting to monitor. And I've said that recently once again in the webinar, like it was like a week ago, 2 weeks ago, or whatever. I said that it's very interesting to be paying attention to very highly correlated instruments, like, for example, the Aussie USD and the Kiwi. Why? Because at the same time that the Aussie USD was forming, if you see it on a daily chart, it looks like a double bottom, but actually, if you look closely, it wasn't even a double bottom. That was a false break lower. So we had a lower low in the Aussie USD. At the same time, the Kiwi was forming clearly a higher low. So these kind of divergences are very indicative. Also, the fact that the Kiwi yen was looking much better. Kiwi yen, by the way, as we speak, testing this channel's resistance, which also confluences with the 78.6 of the last move lower and this horizontal support resistance area. So at a very, very critical level, needless to say that if we break above here, the chances of actually a quadruple bottom, which is something that, you know, you see like so rarely that it's not even worth mentioning, increase substantially, right? So if we then break above 75.50, we actually have a quadruple bottom, and that targets much, much higher levels. So I was also seeing the Kiwi yen being a lot more clean than the Aussie yen. As you see, the equivalent channel in the Aussie yen still is far away from being broken. But as I said, the Kiwi was leading, and that was what led me to the decision to actually short the Aussie Kiwi several days ago. As you know, and ForexAnalytix members know that I have an active pattern in play there as well. Regardless, Aussie yen currently testing the 61.8. It has now broken, though, above a strong resistance area, confluence of resistance here at 80.50. So, you know, it's already making a nice move higher. But as I said, it has not broken above this channel, while the Kiwi yen looks much, much better. So definitely, if you want to be on the long side, my preference remains as an instrument the Kiwi and not the Aussie. Now, having to do, before we go to the indices, and as long as we're still on the 4-hour charts, let me say that the move higher in the DAX still looks corrective to me. And that's one of the reasons why I'm still cautious. And that's why I shorted a little bit. Actually, literally at the highs of the day yesterday, people that are in the chat room, they know that I already shorted a little bit, 1/4 of my regular position in the S&P. And, you know, I'm more than happy to short more if we move higher from there. So DAX so far doesn't seem that bullish to me. And definitely, if we do see an extension of the euro higher, as I've said multiple times, that's going to act as a headwind to the DAX. So I would definitely expect the DAX to underperform the S&P as long as the euro is reversing higher, and if this reversal, you know, gets confirmed at the end of the day. Needless to say that this creates the potential of a double bottom in the euro USD, but it's too early to, you know, call it a double bottom, but definitely a potential. And speaking of divergences that I mentioned before, keep in mind that the euro did test its previous lows while the cable didn't. Okay, so this is another divergence that is worth paying attention to here. Now, having to do with the metals, I have to be very honest. Yesterday, I really believed that, especially the way we closed, that silver would completely break down and push to new lows. But so far today, we're completely reversing this. But I want to see the close of the day, because if we close below this triangle's support and it ends up acting as resistance, you know, it might not mean much. This is also one of the reasons why I have taken profits on all my gold long positions. So now I have no exposure in the metals. But definitely, if this proves to be a false break lower, it might squeeze people higher for another move to the upside, which initially I was a very strong proponent that we would see a second leg higher. But afterwards, you know, when we started seeing that this is simply a triangle and it's failing, I really started believing that that's the end of it. So perhaps I got fooled as well, and I should have held on to the last third of my gold position for another push towards 1260. Anyhow, too early to say.
Don't expect perfection at the crap table.
Yeah. That's very true, Coach. And to be honest, we still have a reversal from this channel. So, you know, it might just be like a false reversal higher. But definitely, I have to say that the situation here with gold and silver
changed
has
it overnight, like the
has been
dollar.
it's definitely more complicated. So personally, I'm not looking to get involved until we get more clarity, because they have been quite clear so far, both in them reversing higher. That's why I was long, and I was persisting in my long in gold for many weeks, actually, until it finally played out. And you know, I started believing that we're actually failing. But now it seems more complex, so I'm
Went
going
right
to
to
stay
the
away.
breakout. So the gold fought the strong dollar all the way up until this week,
Yeah.
like last week, and finally succumbed to a little dollar pressure. But you know, the gold wasn't even close to the lows. Yeah, silver looked a lot weaker. But now, if the dollar is going to enter even a 2-3% correction, I think that's the key to another leg higher to take out the 1242 highs. Yeah.
Absolutely. And we might then see that 1250 to 1260 area in gold being tested. What I had no doubt about, and the only reason I didn't resort it, is because sometimes you just don't want to push your luck, as you know, coach, and people that are here on the webinar. I rided this downtrend in oil from almost 72 down to 66, 66 and change. So I didn't want to push my luck anymore, but it was more than obvious, and I kept writing it in the chat room, that crude was not ready to move higher. It wanted to push lower once again. And just look, despite seeing so much dollar weakness today, just look at this little reaction in crude. Crude has barely moved to the upside after a big down day and the Marubozu closing black. That's how this candle is closed. When a candle closes at the lows of the day, at the very lows of the day, so when the closing price equals the lows of the day price, that's called the Marubozu closing black candle. The opposite would be a Marubozu opening. Marubozu closing white.
I finally know your religion. Okay, I finally know that instead of bringing a lamb or a goat to be sacrificed to the trading gods, you just will pass on a trade. That's your sacrifice to the trading gods.
Yeah, something like that. So I will now pay attention to this area between 63.60 and 64.40. Because honestly, one of the reasons is also I'm watching the extension of this previous channel here, the channel support here, which also confluences with the zone, because more or less this is the line in the sand for the bulls. I do think that there is a decent reaction that we're going to see, a decent possibility that we're going to see a reaction from there, because if the bulls fail to react even from this confluence of supports, then I will start looking crude with, through a much more bearish lens than I have done, because so far I've maintained my long-term bullish thesis. But if we do break below 64 without even a reaction, I'll start thinking differently. Anyhow, I do think that 64 is going to be a great level. It's going to offer a great reward to risk ratio to look for a reversal, for a rebound, at least, some type of rebound. So I'm going to be monitoring that area. And if I do see some kind of a nice reaction, like the reaction we're seeing today in other dollar denominated pairs, for example, I'll probably be buying it, because, I've been on a great role in calling out the moves in crude this year. So, this gives you extra confidence. So I'm not going to hesitate to trade it once again in the other direction if I see some kind of a nice move. But, so far, as I said, I want to see this level getting tested, and, we take it from there. We have a question. How about USD yen? I think that very accurately, and if you watch, so far, of course, we don't know if this is going to get confirmed. Joe called it on his interview on Market Vision. He called it on Bloomberg. We called it here on the webinar some time ago. If you remember, I even had a short USD. If you're a ForexAnalytix subscriber, you know that I had a short USD yen pattern in play, which I actually closed with basically flat with a 0.04% profit, I think something like that, because I believe that it's going to move lower, but then I changed my mind by seeing the price action. And that's when I said here, and Coach remembers it, that I think that USD yen wants to push higher once again towards the confluence of the 61.8 and this 113, 113.50 zone before perhaps moving lower. And that's when we drew this. And, so far I'm seeing this rejection and I like it. And I do think that if this dollar reversal gets confirmed by the end of the day today, and if the risk fails once again, if the stock market fail once again during the next few days, which I think is a high probability scenario, I do think that the USD yen can roll over and actually push finally quite lower from that point on. So as long as we remain below the high that we've now posted there at 113.50 almost, I think the reward to risk ratio is great to be looking for a move lower. So that's what I think about the USD yen. What close would turn you bearish on USD yen? As I said, I think that the reward to risk ratio is already appealing. Definitely a daily close below 111.50, I think opens up the 110 level for a retest. So a daily close above 111.50 confirms and opens up at least 150 more pips of downside, in my opinion. So let's see if we have any more questions. I just realized that I covered a lot in a short period of time. Oh yeah, I wanted to mention, I'm actually watching this emerging market index, the MSCI Emerging Index Fund. Actually, it's it monitors more or less the emerging markets. And I was monitoring this descending channel. I thought that we might see a move lower towards the 61.8, but don't forget that this actual area that we found the low, if I go back in time, and I haven't actually put it on this chart, I put it on another chart, but it doesn't matter. If you see this, we also have this very interesting horizontal support resistance area. Just look, we found a low at this descending channel, and we also seem to be creating a wedge here. So personally speaking, if we see the dollar start underperforming, I would expect that the emerging markets can actually have a period that they will overperform in comparison to the US stocks, right? So I'm watching today's price action to see if we're going to get first the breakout from this descending wedge, and then I'm going to be watching this channel.
Idea.
And
nice
this
look, good idea.
Level.
Yeah,
thank you, Coach. So I think that especially if we confirm a breakout of this confluence of resistances here of the channel, I think that the emerging markets can actually rebound quite a lot higher from there. And in general, I've given you my general thesis. I believe that at some point during the next recession, the dollar is going to suffer immensely. And I believe that that's going to be a great opportunity perhaps for the emerging markets to get some big relief rallies, because I remind you, one huge headwind for emerging markets is that for them to be to have appealing funding, they are forced to issue a lot of their bonds in dollars. So a strengthening dollar, in essence, increases the emerging market debt, because in their own, in the terms of their own currency. While if we see the dollar depreciating a lot during the next recession, which is my main thesis, I know that a lot of people believe that the yield is going to go down and the dollar is going to strengthen because it's going to catch a bid, like a safety run to safety bid. But personally, I believe that with the US already running the deficits, the deficits, the triple deficits that it is, and with the deficits it will have to be running during the next recession, which are going to be above 2 trillion for sure. They might even approach 3 trillion. I very much doubt that the dollar will be able to sustain itself, and I doubt that the treasuries will be able to catch a bid. On the opposite, I think there is a huge chance that they're going to be sold off aggressively. So if that's the case, and we see the dollar depreciating, then we should see emerging markets overperforming greatly. Of course, we're not there yet. That's just, a discussion, that's looking that's more forward-looking.
Always looking ahead, no Stravolgi.
Always a good idea to have the big, the top-down view.
Yeah.
That doesn't mean that you should be acting in the short term just using your top-down view, right? Because that's
sometimes it's good psychological preparation for eventually executing it. Yeah.
Oh yeah, absolutely. By the way, let me add to this chart that we also have very clear RSI divergence so far, right? So that's another indication that something might be brewing. Now, having to do with the reversal in the S&P, we had the divergence in the RSI, and we didn't only have the divergence in the RSI, to be honest, but if you notice, we also had clearly a divergence in the VIX. I mean, when we actually got a new low in the S&P, we did not get a new high in the VIX. So I'm totally with Blake in that. We might see a further rebound in the S&P. That's why yesterday I shorted 27.31 only with 1/4 of a position, because I can't predict in advance what kind of a move higher we're going to have. So I want to have ammunition to build a position as we move higher. What I don't have a doubt about is that no matter how the move higher evolves, it might be something more complex. It might be something like this, right? It might be something like this. Regardless of how this evolves, or we might just get rejected, from there and move, straight lower or whatever, or we might even get rejected from 27.45, because I mentioned yesterday in the chat room as well that the first key level, and I had mentioned it in the past as well, is 27.45. So we first need to clear 27.45 before we start looking higher. But regardless, for what I don't have much of doubt is that, if I keep adding to my position and I build a cost average that's going to be somewhere there, we're definitely at some point going to see a move lower from there, so I can make a profit again, even if this proves being a triangle, which is one of the scenarios. Greg spoke about it. I would still expect to see prices close to 2,700 once again. So in any case, I'm willing to keep adding a little by little to my position as we move higher, and then expect either a new low, which is my main case scenario, or at least a move close to the recent lows before this move, even if it proves corrective, to be over, right? Because moves like this just don't finish, so fast. Technical damage like the one we've already done needs some time to create a recovery, exactly as you saw here. I remember, and those of you that are watching the webinar, you know that when we saw this, I said the exact same thing, that the technical damage like this cannot be undone within a couple of weeks and then see a new high. And the most bullish case scenario is that we're going to see something like a triangle, in which case I would expect the lows more or less to be approached, which the most bullish case scenario played out, but still we saw a move close to the lows. So this is exactly the same plan I want to execute here, because by following the same plan here, if I had built an average position somewhere there, I would still be able to profit by seeing this move here, regardless of the fact that then we saw a move higher to new highs. Okay, so that's my general plan. You think that USD yen is bullish? You know something. So far, I have nothing to say against that, because yes, we have a sequence of higher lows for some time here. That's why I'm staying far away from it. So I made an attempt to short it, because in the short term, it looked like a good possibility that it would break down, and I had a very conservative target. But because I have no proof that it has really turned bearish, that's why I was very cautious and I cut it, at cost. So I can't argue against you. I do see the possibility that it can move lower though before moving higher, simply, for example, to retest this broken blue trend line before moving higher. Because, for example, as you see, you can always have a short-term bearish scenario being combined with a longer-term bullish scenario, because who tells you that we don't get rejected from this very nice confluence of resistances? We then make it down to this confluence of supports down at 110, and then we move higher. So in this case, you will have been able to profit both for being short in the short to medium term and for being long afterwards, right? So I agree
that.
with.
I like that scenario. That kind of fills in with a weaker dollar for a while, and then it's another failing rally in the euro. But maybe it's 119.
Yeah. So my answer to you, my friend, is it depends on what kind of time frame you're looking for. Because if we had a conversation and we said, close your eyes, do something with the USD yen, and you will be forced to hold your position, let's say for 3 months, what are you going to be doing? And you force me to do something, I might actually be buying it instead of selling it, right? But if you're asking me in the short term, I think there is a decent chance for it to get rejected from there, see some lower prices, and then see some higher prices again. Anyhow, I'm not going to pretend that it's easy to read the price action in the USD yen. I've said it many, many times in the recent past. It has been a pain in the butt. And that's why I believe that monitoring multiple markets is a very, very, very good method to avoid pitfalls, because when you're monitoring many markets, as I do, you always have some good looking opportunities and you're not forcing yourself to jump on trades that are actually not so convincing. Okay, at least that's my personal approach to trading. I'm not advocating that you should adopt my approach. Everybody should have the trading methodology that works best for them. Anyhow, I think the time is up. Is your guest here, Coach?
Callum is here.
Okay, perfect. So enjoy the interview, and we'll be back here today. Let me remind everybody, we will have a US midterm election special on Monday webinar, so don't miss that. Of course, we're not going to talk just about politics. We are going to combine that with possible effects on the financial markets. So enjoy the interview and see you tomorrow for the last day of the week. Ciao.
And NFP, buddy.
Absolutely.
All right. Okay, Callum, thank you so much for joining us today. I'm now going to make you the presenter. Looking forward to greeting you, hearing your voice, seeing your screen.
All right.
Just follow the draw. Okay, Callum, I hear you. I see you.
Yes, great.
Perfect. Pleasure to meet you.
Yeah, likewise.
I appreciate you taking some
So you
time
can
out of the
see my
day.
screen.
Can see the top-down charts up here, and I followed you on Twitter, and I've seen a lot of great stuff from you. Appreciate the chance to get to know you. Can you tell us how, really kind of look back, how people have to come up through the industry? I know you've been around for a while, and what it was like for you at the beginning, how you got started in,
Yeah, definitely.
becoming a technician.
Yeah, it's a good question. So, how I got started in the industry was, well, I guess you sort of depends how far back you want to go. If you want to go all the way back to the very start of, my first stock, it was back when I think just before I turned 16.
Wow.
I started reading a bunch of books on the stock market, bought my first stock. I think I bought it at something like 30 cents. It went up to 34 cents and I sold, and I thought I was a genius. And then, maybe a year later, I noticed that stock was trading at 90 cents. So, hindsight's always an interesting thing. And, investing lessons are always some of those things that, you can read them in a book, but then, going out and actually learning them at the cold face is a different thing.
It's all in our head.
Yeah, exactly.
Yeah.
In terms of, well, after that, I guess if you wanted to fast forward a little bit, I went to university, did a couple of degrees, and then my first finance job, it's always tough to get your first finance job. I think that was 2007. So I managed to get in, I started my first finance job in January 2008. So I managed to get in just before things really started getting,
ugly,
moving southward,
yeah,
so to speak. I think if I'd fast forwarded another 12 months, I would not have been perhaps as lucky to get such a job. But it was at the New Zealand Stock Exchange, doing a lot of different things there.
All right. Yeah,
And,
great environment, and
yeah,
you're around traders and everything. I was fortunate. I started at the CME, as a runner and out trade clerk, and it's a shame there isn't that type of environment anymore for young people to go into to cut their teeth on the floor.
Yeah, and well, we got to witness some pretty interesting market action right from the start there.
Yeah.
But then after that, I moved into funds management. So starting with AXA Global Investors, and that was a really great opportunity there. Managed to work with some very smart guys there, and when you're in your early stages, or I think really when you're in any stage, when you're working with some smart guys, it's always very helpful, for your learning process.
Yeah,
and just seeing how other people
rise to
operate.
their level. I teach Callum when people are saying, "Well, how do you go about it?" I go, it's important to surround yourself with people better than you.
Definitely.
Yeah. All right. So
And,
you were blessed.
Yeah, definitely.
All right.
And then I think probably about 3 or 4 years after I joined, another company took over, and we were quite lucky that we were one of the teams that got to stay, and so we weren't laid off. And if anything, it ended up creating an opportunity for me to move across to the Australian office and get a promotion there. And that just saw me doing more and more of what the key thing that I enjoyed doing, that's investment strategy.
Okay.
There's a lot of different things in funds management. There's a lot of stuff that's you might call boring, and then there's the other stuff which I would call interesting.
Yeah, which is the markets, the jigsaw puzzle. So, like I tweeted yesterday that we were going to talk about a few things, a few instruments, and it's my belief, I don't know how you feel, that really the dollar is a fulcrum of the wheel, and everything spins around it: global bond markets, bourses, commodities. So what a day to be together. Do you think that what's happening today in the dollar is significant and may lead to a follow-through move to the downside?
It's a good question. I mean, I was in Singapore a few weeks ago, and I was talking to a couple of prospective clients there, and the US dollar was definitely front of mind, especially for
the emerging markets.
They're very much so thinking about emerging markets, and also about the China. I mean, luckily I've got a couple of charts here that we might want to start looking at. So got here page.
Okay, there's your background. Nice PowerPoint.
US dollar. So yes. So we've got 3 charts here, and I guess just for a quick bit of context, so most of my clients, they're looking at time frame of months, if not years. So that's also how I tend to be looking at things. So hence why we're looking at a bunch of charts here that go back to 94 and 1980.
Yes, I see them.
And so we'll start off with this one. I've left PowerPoint open so we can sort of zoom the charts in and out a bit. So the first one we're going to look at here is this long-term perspective, cycles and ranges for the US dollar index. And I think I wanted to highlight this one because I think what we're seeing here, this thick black line that's going through the middle there, that's a combination of the long-term average and 10-year moving average. And you can see here that we did cross over on the way down there, and then moved back up. And then
like a false breakout or failure, right? Yeah. And
it has there's two situations which you can probably see them straight away where this kind of thing's happened in the past. So, you know, you had the move to the upside there, to the downside there, sorry, in the 80s, where it started to sort of make this counter trend move, and then got straight back to business. And again in the late 90s on the other side, you know, this big bull market starting to get underway, a move back to that line and then back to business in, you know, quite a ferocious way there. So I think, you know, that kind of sets up a sort of pattern or a kind of precedent for what we might be in the middle of now. So, I mean, in terms of the price action of the last couple of days,
looks like George Washington's on steroids. Doesn't it?
Well, exactly. I mean, this is
no good outcome for steroids. All right, go ahead. So that's eventually what could happen.
The thesis here is
that
we do see a stronger dollar on a medium-term basis.
Yeah, eventually George has some what do they call it, atrophy on his body. All right, so what are you saying here? Are you saying that mid black line is just kind of like a swing, and the fact that we're above it and pulling back towards it, you still have to like the long side of the dollar for a bit longer, or
well, I think the you know, just on that one, the point I'm trying to make there is that we've had these kind of big pullbacks, counter trend moves before, and then the trend has actually just continued in earnest. And then you look at the chart on the top right there, that's the red line there is a composite yield support indicator. So it's a combination of cash rate differentials, real nominal shadow, and 10-year bond differentials.
Right.
And that's painting the upside scenario there for the US dollar. I mean, you know,
it's at new highs.
Well, that's right, and it's presenting pretty compelling bull case or upside risk case, if you want to call it that, or gives you some sort of fundamental backing to that idea that I'm talking about with that long-term chart there. And, you know, maybe we do get, you know, a bit more weakness over the next few days. You know, you look at that period in the late 90s there, it's not a straight line in that trend, but that's the sort of broader direction. And the reason that we could, you know, just to argue against myself for a minute there, there's this bottom chart to the bottom right. So the red line there is speculative futures positioning. It's standardized against open interest.
Is that kind of like
it's no secret.
Commitment of traders?
Exactly, that's exactly it.
Okay.
Yes. Yeah.
You're just showing it.
So it's non-commercials. Yeah.
Okay.
And that's, I mean, it's no secret that the traders have been very bullish on the US dollar.
Right. We had some short-term readings of 90%, 92% on the DSI the past week or so. So it kind of fits in with what you're saying is we just have too many people too bullish right now, and we could have a little shakeout for a few days or so. That would create a buying opportunity, shorting opportunity, and things like would the euro be more of a preferred short to you than, say, cable with the background noise of Brexit?
Oh, yeah. I mean, I'm like looking at the US dollar and, you know, from an index perspective, you know, I think this kind of lays out my view, but for cable, that's something that I think that there's the opportunities there are definitely skewed to the other side. I mean, I look at valuation positioning, the direction of monetary policy there. It's pretty compelling long. And I mean, with the whole Brexit thing in the background, I mean, I don't want to be too complacent, but I think that they probably do figure something out. And you know, being short against the possibility of some sort of explosive move on the back of that, I don't think that that's good risk management.
Okay. Thank you.
But you know, from an index level, and it's also interesting too, I guess, against the Asian currencies, which was kind of a good segue into the next slide there, which I also wanted to talk about these. I don't know if you wanted to go into these now.
Sure, go ahead.
So the renminbi, USD CNY is it's been a very topical currency this year, and you know, if you can see the black line on the top right chart there, it's no secret why. Not to mention all the political baggage that that currency kind of has. But basically, the point of these first two charts there is just to highlight that, I mean, it's basically going where it's supposed to be going. You've got economic divergence here, cyclical economic divergence on the left-hand side. China's economy has been slowing down. US has just been going from strength to strength. You got policy divergence, so that red line there is just the interest rate differentials. And I mean,
so you're projecting 781.
If you took the interest rate differentials literally, that would be
where it should
possible. Well, if they, you could argue that if they like completely let it go where it wanted to go, because you know it's they call it a managed float. I don't know if that's the exact term, but basically, you know, it's kind of market based, but still kind of you know, under their control a little bit. So if they took their hands off, then maybe it would go, maybe, I don't know, to that level, but in that direction, I would say so. And then that brings you back to the US dollar, because these two little guys down the bottom here, Asian currencies, so that's an equal weighted index of 10 Asian currencies, and emerging market currencies on the right there, that's equal weighted 25. I think for probably the Asian, that one's probably the more interesting of the two, is that you can see there it's just sitting on support. The breach, my view is that when or if USD CNY breaks through 7, that's going to be a trigger point for Asian currency weakness more, and that's going to be probably echoed across emerging market currencies, and that's going to be the kind of catalyst that's just going to drive the US dollar stronger. And you know, back on that positioning, you know, look at that late 14, early 15 rally, you know, really enormous rally in the US dollar, and that was taking place all the while, you know, positioning was fairly crowded to the long side throughout that period. So, you know, you always think you don't necessarily want to be, you know, taking the same side as the crowd when it's at extremes, but then sometimes the crowd can be right.
Great point. And if you're following commercials, they have deeper pockets than most of us.
Yeah.
And they're hedged, right? And they're hedged.
Yeah. Yeah.
Okay.
And
go ahead.
On China, just a quick flash chart there. That's from the latest PMI results. The China manufacturing PMI from market did have a little bit of a rebound, but if you look at the Taiwan one, it's perhaps telling a different story there. And we've got here on the right there, just that's a composite view of China PMI against copper, and they tend to be partners on their journey for good reasons.
Siamese twins,
yeah. And the reason I highlight those two from a broader risk perspective is the way I look at China from a macro perspective is that a little bit of weakness is a bad thing. A little bit of weakness of the Chinese economy is a bad thing, but a lot of weakness is a good thing, because it basically prompts the policymakers there to get into action and do more stimulus. And so far, their stimulus efforts have been quite well, just in line with how it hasn't, you know, we haven't seen really big weakness there yet. So it has been quite muted so far, and it's not enough to change the game on emerging markets or commodities just yet.
Mm-hmm.
And I'd say that, again, that kind of ties into the dollar in reverse in a way that, if you, at least from a flows perspective, if you had a change in risk sentiment towards commodities emerging markets, that would at least provide, a bit of a flows impulse for America-based investors to look at emerging markets again. So I think for China, I think we need to see a little bit more pain on the macro front there before it becomes a, unequivocal tailwind to emerging markets and commodities.
Okay, we're not there yet. Okay.
Yeah.
Okay. Nice looking
So
chart.
that's yeah, that's what I wanted to talk about on those two issues. Yeah. So did you want to look at some of those other charts in the back?
Sure. We still have some time, Cal. If you're
Yep.
you want to share with us. I'm learning.
Yep.
We all learn from each other, don't we?
Yep, definitely. So I've got a weekly markets pack that I sent out earlier this week, and I've snipped out a bunch of charts that were quite eye-catching to me. And so the first four here, basically, the title kind of catches it, breakdown.
Right.
And I selected these because they're a bunch of markets where they've already broken down through their 200-day moving average, and
Right.
a couple of them have broken through some pretty key support levels, and below those support levels is just sort of this open air.
Yeah.
Like example there, the Euro stocks, head and shoulders top there. Next top is at least 3,000. Listed private equity index, which is kind of an interesting one, and similar thing for global listed infrastructure. Two asset classes which, at least their unlisted versions, have been very popular amongst asset allocators. In this low return, low interest rate world, those two assets have seen a lot of flows, and they haven't really been put to the test since all the way back in the financial crisis.
Well, all the lows before this ramp up happened right after the 2016 election.
Mm-hmm.
Do you think we're going to give up all those gains? Especially, do you think the midterms matter more than the Fed or the trade wars, or it's just kind of a toxic cocktail?
I mean, just looking at this slide and then, looking at that next slide, Asian markets and free fall, you'd probably think that I'm just going to say yes. But I think that you look at the growth backdrop. I mean, we're definitely late cycle, but it's not the end of the cycle. And I think that, you look at a lot of these headline risk aspects, these geopolitical risks, and I think probably the consensus is focused on these are all two-way risks. That there's this possibility of movement in either direction on whether it's something that's going to bash out investor sentiment or even support it. And I think everyone's just clearly focused on the downside risk there, and it's whenever you throw your pendulum like that, it's I think it's important to sort of step back and say what is actually going on here. And I think we've seen enough movement in investor positioning, investor sentiment to lay the foundations for a rally from here. And I guess my headline here is saying that some key troops are still holding the line. A lot of positions have been overrun, and these guys are still holding the line here. So we've got the ASX 200, the Aussie market, TSX 60 Canada, the Nikkei, and MSCI EM in US dollar terms. And I mean, I think these ones are all pretty key barometer kind of markets. and that they they're pretty important reflections of kind of broader global trends. And the fact that these ones, they still haven't sliced through their some pretty key support levels here. And if you wanted a trigger point, these are the ones to be keeping an eye on. If they break down for those support levels, then I think it's just a case of, well, we can argue this, that, or the other thing, but in that situation, you just sell. But should they hold? I think that's yeah.
All right. So I think key takeaway was it's late cycle, but the cycle isn't over. So okay. So I mean that implies that there could be this could end up being a buying opportunity in a lot of these markets to different degrees of relative strength. Have the chance to make new highs. Am I reading you correctly?
Yes, yeah, I think so.
Before the cycle's over. And do you have an idea and what kind of work do you do that gives you kind of a time frame looking through your telescope as to how much runway is left in this expansion and bull market and stocks?
Yep. I'm just opening up another report that I'm working on at the moment. Hopefully I can find the chart. Here we go. So probably that chart on the right there, it's so you got the yield curve there inverted, and that's running that with a 30-month lead against the VIX. So I think we're definitely towards that sharper end. If you took this chart literally, it says that we've got another maybe 2 years before it really in a sustained way heats up in terms of volatility. You do tend to see volatility rise towards the end of the cycle, and there's a few good reasons for that. Various bits and pieces start to come under pressure, as we've seen now, and perhaps delayed reactions to policy tightening show their head. So I think my base case would be that we can at least get another year out of this. Don't want to put too much weight on that. I mean, I try to let the charts do the talking for me, than try to impose what I think should be the case on markets.
Right. If you get different information that this is aborting, you'll see it and you'll know what to do and what to tell your subscribers.
Yeah.
Okay, but it's hard not to do this stuff and do work and not have a bias of what you may see down the road. So really excellent presentation. I'm so glad I chased you to come on here, Callum.
Great.
Really
great.
Excellent. So people could follow you on Twitter at Callum, CALLUM _Thomas. And you're the major contributor to top-down charts because these charts are excellent.
Chief cook, bottle washer, head of research, founder, all of the above.
and now a trading warrior brother of Dale Pinkert. What do you think?
Great.
You have room for that on your calling card?
I think so.
All right, Callum. Really a pleasure meeting you. Thank you for coming in and really giving us some real interesting views and things to chew on as we look ahead to the NFP tomorrow and we get micro again for a few hours. It's nice. Thank you for taking us from our microscope to our telescope today. It's great stuff, Callum. Thank you so much.
Absolute pleasure.
All right. So Callum Thomas, everybody, you could follow him on Twitter at Callum _Thomas and check out his technical work and subscribe at Top Down Charts, www.topdowncharts.com. You're very welcome, Manuel. You're very welcome, everybody. So, I don't think anyone should have gotten caught along the dollar with the things we've been saying this week, including Turnaround Tuesday and the wedges. So we'll wrap it up. We'll be here live for the NFP tomorrow. Most of all, my trading warrior brothers and sisters, don't just count your pips, count your blessings. See you bright and early for the bell, and we'll be here half an hour before the number. Adios. Thanks again, Callum Thomas.